So AMC recently reported their earnings, and it was a bigger than expected loss due to Hollywood delays as a result of the strike last year. And on the news, you saw the price gap down and closed the day at $4.32. Now, this is the daily chart, and you can see some key levels that I marked off at. But before we continue with the analysis, let's actually look at the results. So again, AMC on Wednesday posted a bigger than expected quarterly loss on higher distribution costs for Taylor Swift and Beyonce concert movies and lack of big releases from Hollywood studios after twin strikes. Several big titles, including the second part of sci-fi epic Dune, were delayed by strikes that halted much of U.S. film production until November, leaving little in the fourth quarter to follow the success of Barbie and Oppenheimer. Now, what about the actual results? AMC reported a loss of 83 cents per share for the quarter, bigger than the average analyst estimates of 70 cents. Now, the CEO, Adam Aron, said on a post-earnings call that debilitating strikes will temporarily challenge AMC's earnings in 2024. To me, that means more downside risk. Now, AMC may benefit in the current quarter from the March release of the Dune sequel and the fourth edition of Kung Fu Panda, both of which are expected to be hits. It posted revenue of $1.1 billion for the quarter, compared with analysts' estimates of $1.05 billion. Now, I do have to give credit to Adam. During the pandemic, he took advantage of the GameStop hype as he sold shares at a much higher evaluation to pay down debt and use those funds to continue operations. But personally, I think the movies are a dying business, and hence this is why we see AMC just continue to decline. Now, some big levels. This is the weekly chart. Have a massive weekly sellers level at $13. So if price was to ever move higher, it would be a great shorting opportunity. And how do I know that? Well, after this zone was formed by this drop, one basing candle and the drop, on the retest, price couldn't even get back above $12. So this definitely tells me that there are sellers waiting. And it was a great opportunity to short on the break of the trend line. You have some basing candles, then another leg down, basing candles, and another leg down. And this actually formed another weekly sellers level. So you have the drop in, or leg in, basing candle, leg out, right? Very similar to this leg in, basing candle, leg out. All right, so going back down to the daily chart. This is another level of interest, right? A drop in price, basing candles, and a drop. Right, so as you can see, as price continues to move down, it creates levels of resistance or sell zones. And again, depending on how you draw your zones, great opportunity would have been to go short. I like to draw my zones using in this case, the basing candle with the highest body close. Some people draw the candles like that. Still would have missed that level. Nevertheless, I see more downside risk. I do have a target at $3. Let's see. Summertime is where theaters make most of their money. But again, with all these streaming services, I think the theaters are a dying breed. Thanks for watching. Subscribe. Please like the video.